Hi, it's Dwyer. It is October 28th, 2025. Uh, wealthspinning.blogspot.com, a free site. Also, gamblersadvisory.com, a free site. Nothing I say in this video should be construed as investment advice. I want everyone to think for themselves and to do their own due diligence. Remember, the opinion you should follow should be your own. Just consider this video to be a second opinion from a complete stranger online. Now, folks, this is a week a lot of us have been waiting for. You have third quarter earnings reports that are going to come from companies like Google, who I've mentioned here in prior high risk videos, Meta, Microsoft, and Amazon, right? A lot's coming down the pike. Let's talk about a few of these stocks. Just understand, you can't trust the day of trading when the earnings report is released, because by then savvy investors will have bought the rumor and then sold the news. In other words, they would, you know, buy based on consensus estimates with the idea that they're going to dump the stock before the earnings report is released. So, with that in mind, just remember that, Google um, announces tomorrow, Amazon announces on the 30th. You really have to expect strategic selling before the numbers are released. That has nothing to do with the fundamentals, right? We're really more of a fundamental bunch here. So let's talk about Amazon. Let's talk about some news. Amazon announced that they are laying off a minimum of 14,000 workers. Some reports say that their ultimate plans are to lay off 30,000 workers. This comes less than 2 months before Christmas. I want people to pivot here and just think about commercial real estate for a moment. Right? Just understand you already had the hit with people working from home thanks to the ridiculous COVID policy. My editorial there. Right? People, because of COVID, couldn't go into work, started working from home, found out that they liked it. Right? They didn't need to pay the babysitter anymore. They could actually be at home. Right? They didn't have to pay for parking at the office. They didn't have to deal with the traffic jam on the way to work, right? Highway 10 in Southern California, LA, right? Didn't have to deal with that. Could have remote meetings, figured out how to use Zoom, Microsoft Teams, Google Meet, right, folks? I understand that many employers are saying, look, you better get your ass back into the office or you're going to lose your job, right? But you and I know a lot of workers are saying, hey, look, you go that route, you're going to lose me, right? There are 3 or 4 competitors who would be happy to have me checking in from home, right? Let's just say that remote working is killing commercial real estate. Well, now you have another killer of commercial real estate, right? And let's be real here. Commercial real estate has a lot of unrealized losses in places like San Francisco right now, right? And that other killer is AI. Folks, if you look at the numbers, and I know it's been a slow year for Amazon, right? I get that Amazon stock price is down, let's say 10 to 15% on the year. But recognize that Amazon's forward PE is still a lofty 32, right? So Amazon isn't struggling. No, they're laying off workers because AI is disintermediating their jobs. Right? Why do I want to pay health benefits to this individual? Why do I want to deal with sick days when I can have, AI do the work? Right? The algorithm can actually replace most of what this guy does. No benefits, no pay increases. In fact, opens the door to 24-hour work. Right? I don't have to worry about minimum wage laws, union laws, and all this other stuff. So I need for folks to understand that the more workers you disintermediate, the less the need for commercial real estate in ritzy downtown areas in these major cities. Right? So no one's talking about it, right? Everyone knows housing is in tatters right now. The residential housing market. Folks, the residential housing market has this mythology that if we could just lower borrowing costs, if we could just lower mortgage rates, people will flood back in. That's not going to be the case with commercial real estate. Right? Understand these businesses are cutting workers, even those with 32 forward PEs like Amazon. Right? Even those making huge capex expenditures like Amazon. Right? So just understand this is the story of our time. One of the reasons why AI is essential is because its ability to reduce labor needs and costs is real. Right? Let me say I'm a fan of Amazon. Just as a consumer, I use Amazon grocery. I'm not sure if I went to the supermarket whether I can get better deals than I'm getting with Amazon grocery. Right? Just food for thought. So recognize that. Let me also say, too, I remember when Amazon Prime got into the streaming game, and now Amazon Prime is one of the best bargains in terms of streaming, right? They have live TV now, right? They folded Freebie into their Prime offering. Let's just say that Amazon continues to serve the consumer. We all understand that they're really a cloud computing company at this point, right? AWS is really the profit driver for the business, right? We also understand that soon they're really going to be an AI company, right? But, all of that said, just understand the market is still giving them a lofty 32 forward PE. Let me say, too, that Microsoft has a lofty 33 forward PE. Now, Microsoft has the gargantuan market cap, right? Along with Apple. They have that gargantuan market cap. I think Amazon is doing a lot of great things, but for this investor who's cost conscious, right? I am really more attracted to Meta, forward PE 25, right? CapEx for the year estimated to be $100 billion. Let me say, too, in this era of large language models, rather than pay for access to large language models, Meta and Google, right? $85 billion yearly capex. They might up the number, both of these companies, when they have their earnings reports. But just to understand, I believe the market's out of whack here because these companies, have access to unlimited large language models, right? Because you voluntarily on Facebook input your data. You voluntarily on Google input your data because you're getting the services for free. Right? So I'm a little bit lost on how OpenAI can actually compete when these other companies with, forget the name Max 7, very reasonable forward PEs, right? Again, Meta 25, Google, I shouldn't say Google, let's say Alphabet, the parent company, 24, right? And of course, you're at the center of the AI rollout, right? I also like the idea, too, that these companies are as diversified as they are, right? Let me say, you know, people are going to freak out. Meta's numbers might come out. Their last quarter was such a blowout quarter that their earnings per share might have a little bit of a sequential dip. In my favorites folder right now is a critic of tech. It's important whenever you're thinking about investing to hear from the critics, right? Nobody's special. He's one of the best on YouTube. And he, of course, is criticizing Cathie Wood for making some, tech purchases. He's, of course, criticizing the tech space for all the money that's being spent on the AI rollout. He feels some of these companies are going to go belly up. Let me be clear here, right? There's going to be consolidation. You know that because there's always consolidation. Even when you have breakthrough technologies like the automobile, right? You're going to have some product lines, even high quality product lines, right? The Packard car and stuff like that, not make it. You understand that. I have no doubt that down the road there might be spin offs, there might be mergers. Some of these companies might sell assets. You might hear that some of these vendor financing deals are blowing up and stuff like that. But what I want people to realize is that year over year, in terms of revenue, Meta's up 22%. Right? Just understand, for those who invested in Google, when I, started talking about Google here in this high risk series, Google is up more than 30% on the year. And of course, Google is very well positioned for the autonomous vehicle revolution that's hitting cities one by one right now. Right? And of course, Google, $85 billion in CapEx spending, a lot of it going toward their AI build out. Right? And, recently you heard news about IonQ and quantum. And of course, Google then released its own quantum news because Google is one of the Goliaths in the quantum space. If you believe quantum computing is going to take over, Google, of course, is singular in owning the forum that we're interfacing with right now, YouTube. Google's forward PE at a time when Amazon is at 32, Microsoft is at 33, Google's forward PE's at 24. Let me say there was an overhang on Google stock because there were antitrust concerns pending legal action. We're now past that legal action. Right, folks? In the media they say Mag 7, and, they then try to tell you that the Mag 7 has a disproportionate hold on the NASDAQ and what have you. Just understand, a forward PE of 24 for a company with Google Cloud, YouTube, Waymo, right, I would argue is reasonably priced. Don't be surprised if Google, which is even making their own chips these days, jumps after its earnings report. Right? Let me say, I'm in Google for the long run. I have no current plans to sell the Google shares I own. Right? The capital gains I would have would also make it not advantageous. So I don't want to realize those gains. right? I'd rather have a capital base, right? But let me just say, my advice is to look at these stocks individually. Don't look at them as a group, right? Pundits who are complaining about vendor financing and stuff like that and considering the Mag 7 as a group and talking about how outsized the capex spending is. Really, and are talking about AI bubbles. I'm not sure if I know what that means, right? Because just understand the internet. A lot of companies didn't make it, but yet the internet is absolutely indispensable to everyday life, right? We're communicating via the internet. Think about your use of things like Zoom, right? The whole idea of remote working relies on the internet. Think about the value of emails, right? Think about all you accomplish streaming, which I mentioned earlier. That's internet based. But yet, there was consolidation in the space. Was there a bubble back in 99, 2000? Let's remember at one point, Amazon, a company not only still with us, but thriving to the point where its forward PE is in the 30s. Right? And that's in a year where it's lost 10% or so, 10 to 15% of its share price. Right? Amazon's still with us. They're thriving. They're involved in the huge CapEx AI rollout. There was a time when Amazon dropped more than 90%. Was it in a bubble then, or did the market misprice things? Right? I would argue that while AI is new, and while not everyone is going to succeed, I don't think long-term AI is a bubble. Right? I can tell you too, the technology is so far ahead of where, I thought it would be, that I can't even imagine where it's going to be in 2 or 3 years. When you hear too about, companies like Amazon disintermediating workers, right? Laying off more than 10,000 workers, having a situation where the market right now is trying to figure out, is the 14,000 figure the top figure, or is it 16,000 more who are going to be laid off? Right? When you're talking about thousands, literally, of people disintermediated because of technology, folks, that technology is incredibly valuable. Right? Other companies are looking at Amazon and other users of AI. And if Amazon succeeds in disintermediating workers, you can imagine they're going to say, let's increase our AI exposure. Right? Our federal government, with its, $38 trillion debt, might want to consider embracing AI as it is. Donald Trump is meeting with the CEO of NVIDIA this week. Right? So, let me just say, in advance of the earnings reports that'll be coming, remember, investors act strategically. You have a lot of investors who are just going off consensus numbers and they're thinking, wow, these consensus numbers look good. Let me ride this wave until the earnings release date, and then I'll just sell in the morning. Right? Nothing personal against the stock. It's just that I want to lock in profits, and I don't want the risk of hearing that CapEx is getting cut. There's some sequential dip in EPS that the public's going to misinterpret. Right? I don't want the risk of bad news. So you can't go on short-term swings in price before the release of the numbers. understand too, when you have great consensus numbers, right, when everybody seems to be expecting Google, which is having a great year, to continue to rise, right? You can't go by market reaction after the release of numbers, right? You have to be able to know how to read the numbers. If it's good news, it's good news. Sometimes there are dips after great earnings reports because people will then say, wow, the consensus number was so high, I was expecting a bigger beat. Or, wow, they didn't quite beat the consensus number even though they were 98%, 99% of the way there. No, you need to have a macro. You need to think in terms of where's AI going? Are things paying off? Is the vision still intact? Right? Are people using driverless cars more? Right? Are, Google's deals with, others where they're, getting together with energy companies to reopen, closed nuclear plants and stuff like that. Are those plans, is the narrative behind those plans still intact? That having access to more energy, in particular nuclear energy, is it still a good thing? Or is this going to be the kind of thing where the squeamish don't understand the space? They're hearing that, tens of millions, if not billions of dollars were involved in recent deals and aren't panicking because the money's so great compared to the rest of the economy, right? Just remember, when you start hearing about AI bubbles, just remember Google's forward PE right now is 24. Right? It's 24, folks. Just remember, with all this huge CapEx build out, right? Google raised its CapEx spending in an earlier earnings report by $10 billion. Just understand, Google is up around 30% this year. Right? So, forget aggregate numbers. Look at individual companies. Right? Just understand that Meta, Google, they're up on the year. They have lower forward PEs than Microsoft and then Amazon. Right? Those are my thoughts. Let me hear yours in the comment section of this YouTube video. Thanks for stopping by.